All right, good morning. Good morning. Happy Monday. Hopefully, you guys are having a good start to your day. So, I'm just going to do a quick recap of today. We just had a run up and then just a dump down. And then just accumulated for the rest of the day. It was a very whatever day. I wasn't looking to take a trade today, but something appeared and it looked good. It was pretty obvious, so I just took it. So, let's just get straight into it. So, this box right here coming into around the macro 750 to 810, if that's even a valid macro. We trade down into this 4 hour fair value gap, and also, let me go on the 4 hour and show you. So on the 4 hour, let me just hide these freaking gaps. Okay, so we trade into the 4 hour fair value gap right here. And then actually, if you see ES on this exact candle here, this down close candle, or this up close candle, sorry, ES actually comes down and wicks that, creates a rejection block. So now we have an SMT rejection block, aligning with the 4 hour fair value gap, and then as well as, so you have the standard deviation for this, the standard deviation at -4 that lines up with the equal lows perfectly, right? And I'm marking this is how I do it most of the time. I look at the swing high of the manipulation leg and I mark the body of it. So in this case, the opening price of the bearish candle, and then I mark the lowest, in this case, since this is the lowest low and the body's up here, it doesn't make sense. So I just mark the lowest body. And then of course, it all lines up with everything. -3 at this low, -4 at this low. Sometimes you're gonna have the -3.5 line up with things. It does in this case. It lines up with this fair value gap in this case. Like, so many things. 9:30 opened. I wanted this market maker buy model to finish, right? Smart money reversal, first leg distribution, accumulation, and then we come all the way back to the original accumulation, all the way to the -2, and then we also retest this old order block to the tick. I've noticed using older order blocks that have already been traded into act as like resistance or support, and they almost hit to a tick. It's actually pretty cool, but something I just have figured out, just looked at in previous price action. So that's what happens. We get to -2, trade up into that, we take the London highs, and now I'm just expecting a pretty hefty sell-off now. And that's basically what happens. We get a nice displacing candle. We get a fair value gap. I didn't want to enter on that because we didn't get a break below this low yet. In this case it worked, but from what I've seen and what I've known and back tested and seen with data, I could get a higher win rate if I just wait for this low to get closed below. And that's exactly what happens. We get a close below that low, and then 9:58 the next candle opens. So since we're, pretty close to the target and all this price is balanced up here, I don't expect price to trade back up into here. My eyes are obviously on the equal lows and all this low resistance liquidity down here. And then obviously the new week opening gap. Wrong one. Right there, that blue line. That's where I did a TP because I just wasn't expecting price to really just sell off this much. But I knew these were the draws, but I thought it was just going to be a slow chop down to it, not just super efficient, just selling off super quick. But let's go back to the 10-second, which is where I executed from. So, or actually, I'll go back because I made this video for someone who had a question. So basically, normal 2022 model, right? Liquidity sweep here, liquidity sweep at London highs, deviation, old order block supporting price, and then also we have an SMT with ES here. So many confluences telling you to short. Break below the low, first fair value gap, where is it? Right here. Enter short here. Stomp above any of these highs, really. Target the equal lows down here. Simple trade. Wouldn't really partial. There's no point in parceling in my opinion. But you can if you want, depending on your strategy. Just the way I trade, it doesn't make sense for me to partial. I like to keep my statistics consistent. It's from what I backtest, right? I don't really partial too much when I backtest, but it still can be profitable if you partial. So that's what I was looking at, right? 1 minute there, stop up there, target equal lows, simple trade. But what I took, right, 9:57, that candle closed. So 9:58, this candle, right, broke below that low on the 1 minute, right? And then we trade back up into this mitigation here, right? High, low, lower, high, lower, low. Trade back into the mitigation, right? Also SMTing with ES, right? So ES took this high here, and Enki didn't. And then we get a nice inversion. I get in on the retrace. I could have had a tighter stop, but it was a Monday, and I was trading on the 10-second, and I haven't been trading below the 15-second for that long. I'm pretty new to it, so I'm still kind of getting comfortable with it. But yeah, that's pretty much what happens. And then we get in here and then get out there. It's a pretty simple trade. So pretty easy trade. And then as of right now, we pretty much, if we take the original deviation here, you'll notice that we trade back to the -3, back into the 4-hour inversion, right? So you have a decent amount of things here telling you to go long, right? You have this bullish SMT, you have this -3, you have this retest of the 4-hour, and then you have this immediate displacement candle through this 1 minute. That could be a setup or an entry if you want to take that up to this internal high, right, to this mitigation. Or you can look to just wait for some sort of SMT to then take a trade off of that. So in this case, right, we trade up and then we leave behind this 3-minute gap. There's no 4-minute, there's no 5-minute. Actually, there's a very small 5-minute right there. So we never close below that 5-minute gap. We hover over it. And this is how you to avoid chop. Wait till the move, right? Wait till the move happens. Wait till like a nice move up. If we get a retrace, right, and then trade back up, and then we kind of just not really move from there, like we just make an expansive move and then just not really do anything, we're most likely going to chop, especially after hitting two very prominent key levels for the day. I mean, we ran London highs and then immediately displaced and then traded immediately all the way back down below the 9:30 open, below the 8:30 open, all the way back down to retest this 4-hour gap. Price is more than likely not going to make too many significant moves throughout the rest of the day. That's just what's more than likely to happen, right? So obviously, if you look here, we had that breaker that we just traded immediately and just dumped straight down to. And then if you look here in this accumulation, right, we get basically nothing. And then when we think all hope is lost, nothing happened, right? And then we trade above this high, trade back into the breaker, right? Which is good. Trade it back into the breaker, and then we sell off again. There really wasn't much here, but if you did want to catch something, yes, actually did come down and take this low. But you can be a little confused at times, because if you look, this low here is this low on ES, right? And it gets taken multiple times. It's generating high resistance over there. So it gets taken all these times. When can you really expect the SMT to actually make a move? Well, if you look at this low and then you look at this low, we SMT, but we just move up and then we open and then move down and then we just chop. The next low opens, right? Takes this low on ES and then it just runs up. We don't really have much. If you look on ES, it's just running back up into this new day opening gap and already took the high here. So there's no point in longing this now because this is already taken on ES. And then it's taken, of course, the next couple minutes, and then we trade back down and look, this is our prominent SMT. Now this is what you want to look for, right? Now you get this inversion here, right? You can either take this inversion, trades up, you get a fair value gap, you can wait for that, trades back in, and then you can take partials or just take everything off at the breaker. And then it hits the breaker. Obviously there's no setup here, there's no gaps, I don't see anything really, but trades back down and now we're just in a range. There's really nothing. So take that into consideration, right? There are big moves that you can catch intraday before a chop could potentially happen, and there's little scalps like this that you can catch coming out of an accumulation, right? This SMT was our manipulation, even though we didn't take the low, right? Because you can look at accumulation like accumulation, manipulation, distribution, right? We never came down and technically manipulated the low. But since the SMT was prominent there, and that was our leg out of the accumulation, right, our displacement away from the opposing our draw on liquidity, that's our manipulation after seeing the SMT, and then we could look for an entry towards what we want, right? This fair value gap is balanced. We don't need this fair value gap high, but this breaker is still left open for price to retrace back into, especially after holding this 5-minute, getting this bullish SMT. Price is more than likely going to trade back up into this breaker, right? Now, if this low was a lower low or a higher low, it would be a mitigation. It would be treated the same way. It would just be that this high was never taken by this high, and it would be the opposite, right? So that's all I got for you guys. Hopefully it made sense, and I will be in contact with you guys for the rest of the week. Let's see how price action is. We do have a pretty hefty week in terms of news, so we'll see how all that goes. But that's all I got for you guys. I will catch you guys tomorrow, and yeah,